Hi, good afternoon, and welcome to our IG live session today. My name is Sansia Thompson, and I'm the manager in charge of wealth management and syndication here at NCB Capital Markets. Joining me today is Tamara Jackson, and Tamara is our manager in charge of origination and structuring. And we both will be going through with you today all the details that you may have as it relates to what is on offer by NCB Financial Group. And tomorrow will give you all the details. Be sure to include in our comment section any questions or queries that you may have so that we'll be able to address it during the next hour. So, Timar, what is really on offer here?
Hi, Sansia. Good afternoon, everyone. What is on offer really is a bond by the NCB Financial Group. It is a 6% bond, and it is going to mature in 4 years. Did I say 4 years?
You did say 4 years, and I'm wondering why since you're pushing it
I
hard
wonder
at
why.
the year.
It's because of 2024. So it actually matures in 3 years. So it's much better than what I just said to you a while ago. So it matures in 3 years. That's in 2024, and you're getting 6% on that bond. The minimum subscription, of course, is fairly low and accessible to the average man. That is $100,000 Jamaican dollars, just to be clear, right? And it's pretty much open now and available to everyone who wants to subscribe.
All right, so let's go through slowly the terms of the offer. So you're saying that there is it's 6% maturing September 2024.
Right.
Give me some more details. This is that I put this $100,000 in and I only get it back at that time. When is it that the 6% is paid? Give us some more details.
Right. So the bond actually pays interest of 6% semi-annually. So every March and September, you'll receive a portion of that interest, half of that interest, 3%. Thereabout, that will be credited to your brokerage account or wherever you mandate us to place those funds, right? Yeah, that's a key thing. The bonds are unsecured bonds, of course, and the total amount is gonna be that we're looking to raise is between $15 billion and 22 billion Jamaican dollars.
Well, Tamara, you said $15 billion, and you said it so casually, as if it's nothing. It's a little bit of money. We know it's a lot of money. What will NCB Financial Group be using these funds to do? What's the purpose?
Well, the company will be using the fund. They'll be putting the funds to good use. First thing is that they're going to be using the funds to refinance some existing debt. And one of the other things that the company is looking to do is reprofile their liabilities, right? And what we expect from the company in doing this is that it will actually strengthen the group's balance sheet as it continues to pursue opportunities for growth.
Okay. And as a client of NCB, is it that I'm able to get this offer? Any restrictions? Is it open to everyone? Can I go and tell my mother, my grandmother, my uncle? Give us some more details as it relates to that.
Well, you can pretty much, the bond is open and available to everyone who can actually, come up with that minimum subscription amount of $100,000. So if, you can find that amount right now, and you have your auntie, your brother, your sister, your uncle, your auntie, your grandmother, anybody within your immediate network that you think would benefit from such an investment, you can tell them about it, spread the word, encourage them to actually, put some money into this, because it will definitely give them stable income over the next 3 years. And it is also an investment grade issuer. So it's going to be an investment grade bond, which means that you can expect stability in the price over the next 3 years generally. You
So
know,
you have gone a little ahead of me because I was just about to ask what are some of the benefits? Because we have heard so much about stocks, we have heard about bonds, we have heard about repurchase agreements or fixed deposits generally.
right.
But take it back to basics. What is a bond, and what would be some of the benefits for investors who, like me, who may want to participate in this offer?
Okay, so a bond really is a fixed income instrument, and it represents a loan made to loan a loan made to an issuer by investors, right? Typically, these issuers are corporates such as NCB or the government. Those are the persons who tend to issue bonds, right? A bond could be thought of as what we call an IOU between the lender and the borrower, and it includes details around, how the contract should operate during the course of the bond. So over the life of the bond, right? So really it is a contract between you and the borrower, in this case, NCB Financial Group, over a certain period wherein they promise, they collect a certain amount of money from you up front, which you loan to them, and they promise to pay you a certain interest at a certain frequency, in this case, semi-annually. And at maturity, which is 3 years from now, they will repay the principal that you'd have loaned to them, right? So really it is a contract, and there are a number of details that govern how that contract operates. It's going to be done through we're going to have a registrar, paying agent, and trustee in the form of, we intend to use a JCSD, which is going to operate on behalf of the investors as a whole to make sure that all the things that the issuer says that they're going to deliver to you and commit to you are delivered on over the course of the bond.
So simply put, it is just like if I wanted to get a loan,
Right.
I go into the bank and I say, hey, I'm interested in getting a loan, and evaluation is done. There is an agreement that is signed, and there are terms that are set out. So
Right.
there's a rate that the bank will communicate to me that, hey, Sansio, this is the rate that you would need to pay for the amount of money that you want to access.
Pretty much. Pretty
Okay.
much. The only thing is that in this case, you're actually lending to the institution that would normally lend to you, right?
Mm-hmm.
So for those NCB customers, especially who, you probably have a car loan, a mortgage with NCB, this is an opportunity for you to actually, earn some interest from NCB as well, we scratch each other's back, so to speak.
Okay. Well, I have this question coming in from Dave. Dave, thank you for your question. But what's the difference, in that we're talking about bonds and stocks? What's the difference between a bond and a certificate of deposit?
Well, I think that the main, I'll just stick to the high level difference. The main difference is that one is more a long-term instrument and one is more a short-term money market instrument, right? And so, CDs are offered by financial institutions, the DOJ and so on.
The building societies, the credit unions.
Right. So, and these are short-term instruments, and they're really for you to have that liquidity. So if you need something that is near cash and you want some interest on your money, you can buy into a CD, for example. It's almost like a fixed deposit, loosely speaking. Whilst in this case, a bond really is a long-term instrument. It is a security, it is a contract between you, the investor, and the issuer. The rates are generally higher due to the fact that it has a longer tenure. In this case, this bond is rated And there are a number of other features which I can get into, but I don't think that is necessary right now. The key thing
No,
is that
we
once
want
the
you to be able to make it very simple for the audience
well,
to understand.
the main thing is that between the two investments, one is more short term, liquid. You can pretty much call on it whenever. I mean, there may be, if I'm not mistaken, a penalty if you were to break that CD prematurely, right?
Mhm.
In this case, for a bond, the intention is to have the bond listed on the Jamaica Stock Exchange private market, wherein investors can go in pretty much and trade it, much like they trade stocks. So the difference, a key difference you want to note here is that you will have liquidity through a platform that JC offers where you can go and trade the bonds, right? So whenever you feel like, okay, you a year from now, for example, you want to, cash out on this investment, you go to that market and you sell it. You approach your broker and you ask your broker to sell it for you. I mean, whatever way you choose, right? Um, and the key thing is that you won't incur any penalty for selling your bonds. There are the regular trade fees and so on, but there's no breakage fee.
Okay. All right. Thank you for taking us back to basics so we really understand the difference between a bond and CD. Just want to remind our viewers as well that of course you can include your questions in the chat that we are able to respond to them during the session. Now, just to remind you all that the purpose of this session is to go through the current offer. What is being offered by NCB Financial Group is where the group is seeking to raise $15 billion up to $22 billion. And you can benefit as investors by investing a minimum amount of 100,000 Jamaican dollars. No, there is no maximum. So if you have $10 billion that you want to invest, we will gladly welcome that. And what will happen is that every March and each March and September through to maturity, you will receive an interest of 6% per annum that is paid to any account that you would have indicated at the time of the offer. Tamar, is there a specific time for this offer? Can I participate in this offer in the next 3 months, or is it that there's a deadline?
Yes, so that's a very important piece of detail for everyone to know, Sansia. The offer would have opened on the 13th of August, and we have extended the offer. The original closing date should have been the 2nd, but we've extended the offer, bearing in mind all of what is happening now in terms of restrictions and so on. We have extended the offer out to September 9th. So the offer closes on September 9th, right? So you can buy into this bond, subscribe for the bond until that time, unless we further extend the offer, of course.
Okay, so after the closure date of September 9th, is it that the offer is no longer available?
Well, so the offer itself will no longer be available in the primary market because, right, persons would have subscribed, would have closed out the offer, right? However, you can still buy the bond in the secondary market, right? So there is an opportunity for persons who wish to buy the bond subsequently to acquire the bond in the secondary market. However, you want to note that generally, there's no guarantee that you'll be able to get the same price for the bond in the secondary market because due to active trading and so on, the price may change, right? The price may go up, right? You're guaranteed to actually get this bond priced at par. That's 100%. If you take up the offer at this time during this period while it is open.
All right, so you made mention of a secondary market. Is there a primary market? Is there a main market? Because you mentioned secondary market. So tell us about the differences in the markets so the viewers can thoroughly understand.
Sure. Well, the primary market for all intents and purposes is the initial issuance. So much like you have an initial public offering of shares, which I know most persons are familiar with, when you're buying the shares around about the time that the seller or the issuer is offering them, you're actually getting them in what we call a primary market, right?
And this
Once,
is like, for example, an IPO.
yes, yes. Once the offer closes and investors are allocated shares and so on, and trading begins, then what you have is what you call a secondary market, right? And so that's regular trading. So that's a key difference. So during the period where we have this offer open by the issuer NCB Financial Group for persons to subscribe, this is an offer available now on the primary market. When the bonds start to trade, that is considered the secondary market.
Okay, great. So Delmar asked, why should someone buy into an NCB bond? And I'm happy that Delmar has indicated that he's a young investor and he wants to know what to look out for. I recall, Timar, earlier in our discussion, you made mention about secured, unsecured bond. Help our viewers understand what goes into that, and what it is that investors should look out for generally when they're looking at bonds or considering bonds to be added to their portfolio.
Right. So, I mean, thank you for that question, Delmar. So, I mean, before I answer your question more directly, I'll get into what are some of the key things that, as an investor, you need to look at when you're considering whether or not to buy a bond, right? Now, as I like to say, when you're gonna part with your money, you're gonna invest it in whatever you want to invest it in. You want to measure twice and cut once, right? You want to make sure that you're making a sound investment decision. And so if you don't feel like you have all the information, you want to talk with your investment advisor, who are professionals trained in terms of understanding the various instruments that you're going to invest in and so on. And also, they have an awareness of the various companies as well, and the strengths and weaknesses, right? So one of the first things you want to understand about any company which is offering a bond for you to invest in is the company's history. What is the history of performance? How have they performed over a certain time period, right? In this case, you're talking about NCB Financial Group, which is, a household brand here in Jamaica, a very important financial institution for many persons, and it's pretty much plays a critical role in the entire economic ecosystem, right? So this is a company which has seen bad times in the past, right? And has basically risen out of those bad times and basically have a very strong and really impressive story, right? From the times of FinSac and so on coming up to now, in terms of growth, financially and otherwise. So this is a company which has a very rich and strong history of performance, right? You want to look at the company's profile. You want to understand, what industry it is in, the risk that face that industry. What are some of the things that, will benefit that industry and so on over the near term. You want to understand the management and governance of that particular institution. Is it well run, right? And NCB Financial Group in particular is one of those entities that would have won multiple local and international awards and recognitions for the way the company is run, right? Financial profile, that's a key part of any consideration you want to do when you're going to invest money into a particular company, right? You want to know about, whether or not they're solvent, how liquid they are, how profitable they are, right? And NCB Financial Group has sort of demonstrated over time really good financial strength, has been shown to be fairly profitable, And one of the key measures of how successful the company has been is, as an indicator, a rough indicator, is just the fact that when you look at the share price, it has risen quite a bit over the last 5, let's say 10 years, right? Where it would have been 10 years ago to where it is now is an indicator of the fact that management has been, executing on some strategies that are accreting value to investors, and the company is fairly profitable. And, for that reason, it is attractive in the market to investors. And a key piece of information you want to consider, especially as it relates to bonds, when you're going to invest in a bond, is what is the credit rating? What sort of credit risk is involved in me, spending my money to buy an instrument in this company, right? And this particular measure is important because it summarizes a key summarizing factor of all the information I would have mentioned before, right? And in this particular instance, we're talking about an investment grade rated entity in the form of NCB Financial Group, right? On the local currency scale, so we have a credit rating agency, CARICRIS, as a regional credit rating agency. CARICRIS rates NCB Financial Group A+ on a regional scale, and on a local scale, it is rated even higher. And
what does
that
really
rating,
mean?
repeat that?
What does that really mean? What A plus? I mean, we know when we go to school and we get an exam and we get back the grades and it says A plus and we feel good. Is it that it should give us that same level of feeling?
Well, I mean, I wouldn't necessarily say. I mean, this sort of A plus is different, but A plus in anything is good, right? It's saying that what this A plus rating says is that this company, has fairly stable financial performance. It has a strong market position, and it also reflects the fact that the company has really good governance, right? Which is something that I would have mentioned that you want to pay attention to. You want to make sure that the company you're investing in is managed by people who, are qualified and who have demonstrated over time their ability to execute, come up with strategies that will grow the entity and also execute on those strategies in a consistent manner. So yes, that A+ rating, credit rating, is a really good indicator. It's saying that this company is a strong credit, and it is one that you can consider based on the fact that it is that stable financial performance, strong market position, and really good governance.
All right. So those are key factors that investors should look out for when they're considering adding bonds to their portfolio. And you will agree, Tamara, that bonds are really important in any portfolio, investment portfolio that we
Right.
actually put together. It serves
Right.
its purpose primarily because you are guaranteed those interest payments as set out by
Yes.
the term sheet.
Yes, Sansia. And the thing is that, like, this credit rating, I don't want to sort of oversell it, but what a credit rating tells you is, from a risk management perspective, it gives you some information. It tells you what is the likelihood, or gives you an indication of what is the likelihood of this entity actually defaulting, right? And in the event of a default, what is the likelihood of you getting back, recovering a certain amount of your money, right? Now, for an investment grade rated issuer, what the history and the statistics show is that for entities that are highly rated, investment grade rating, there's a low chance of a default happening, right? So that is the main risk that investors face, that potentially an issuer is not able to find the funds to pay them their interest, and at worst to come up with the principal at maturity, right? Now, what this investment grade rating is telling us is that there's a low chance that such an event will happen, right? And if such an event should happen, there's a high chance that you'll be able to recover most of your money.
Okay.
right? So that is what an investment grade rating communicates to you. And that is why we think that, as an issue and as an opportunity, this is a really good opportunity for, the average man, because and we know that people are at their stages in terms of, developing their investment portfolio. For the persons who are just starting out, who are really risk averse, who want to, get their feet wet, this is a relatively safe investment, right? For the persons who are later on in life, more mature and so on, and they're looking to more protect their wealth, this is also a really a relatively safe investment to actually invest in. It gives you stable income, and there's a high chance that you will get back your principal at maturity.
Okay. All right. Awesome. So it is 6%, minimum $100,000 to participate. There is no maximum. It's only available in Jamaican dollar, no other currencies. And yes, Delia, if I'm pronouncing your name correctly, it is taxable because NCB Financial Group is a local entity, and by the laws of Jamaica, we are required to withhold tax at 25% on interest income. So thank you for your question. I'm seeing a lot of questions in the comments, and thank you so much, audience, for sharing the questions about extending the time. Some persons want some more time. I guess you have some monies coming in at the end of the month, end of September. I know you had indicated earlier in our discussions, Timar, that the time was originally adjusted by an additional week because of the current restrictions. And I see that we have a number of viewers on, which means that a lot of persons are in fact staying at home. So we're happy about that too. But is there any possibility that the group would consider a longer time?
I mean, we're always open to consider the information that we're getting from our investor base, right? The important thing is that the objective of the client, in this case NCB Financial Group, is met in terms of raising that money within a certain period of time. But also, if there's opportunity for an extension within the parameters of what issuer wants, then that's something that we can definitely consider. So given the interest we're getting here, this is something we'll have to make a note of and talk with the issuer about. But I must say, audience, that there's no guarantee that the issuer will want to have the closure date further extended. So if at all possible, it's critical that you make your best efforts to take advantage of the opportunity within the timelines that we have now available.
Thank you for that, Tamara. I know we had mentioned earlier about the difference between bonds and CDs. I want you to do a comparison, investing in bonds versus that of stocks. Over the past few years, we would have been so accustomed to seeing stocks being issued, a number of IPOs, and NCB capital markets would have raised some of these funds as well. They would have supported a number of companies coming to the market for the very first time. There was Trans-Jamaican Highway, there was Fesco, there was Tropical Battery, just to name a few, to include the lab as well, and Mailpack. How do you compare bonds to stocks? What would be the major difference? And do you think that they both play a significant role in my portfolio when I'm looking out to building up my investment portfolio?
Right. So that's a very good question, Sansia. So you can look at the difference along a number of dimensions, right? First of all, what does your investment in a bond versus equity or stock represents? In the case of equity, your investment represents an ownership interest in the entity that you invest in, right? In the case of a bond, what you have essentially is a loan, interest in the entity that you've invested in. So it's really a debt instrument with a promise to pay back the principal with interest, right? So that's a key difference. Another thing you want to note is what is the type of return that you'll get from the instruments, right? And in terms of equity, investors will earn from the company what the company earns, dividends, right? In the case of bonds, investors get interest payments that are made in the form of coupon payments, right? A key thing here is that dividends are not guaranteed. You know, dividend is something that is really at the discretion of management. You know, say if the company performs really good this quarter, the management might decide that, okay, we're going to pay out some dividends. But if it performs and they have a lot of reinvestment needs and so on, they may decide not to pay a dividend, right? However, in the case of interest payments, those are pretty much contractual, right? So the company promises to pay 6% quarterly or semi-annually. They have an obligation to pay those interest payments at those frequencies. So it's almost like you're guaranteed these streams of income in the case of your interest payments from the bond, right? In the case of your risk level, that's another way you can compare them. The risk level for equity is high since it depends upon the performance of the issuer. So there's no guarantee of returns, right? In the case of a bond, the risk level is a bit lower since bondholders are prioritized for repayment. So you will get your money before the equity holders get their money. That is what the contract says. You have a right to get those funds, your interest payments, and also your principal repayments before the equity holders are paid any at all, right? What are the additional benefits to holding a bond versus a stock? In the case of a stock, shareholders generally have the right to vote. You're an owner, so you have a right to vote, right? In the case of bonds, you get the preference in terms of repayment and also upon liquidation of the entity. So, you know, it's really a trade-off. Do you want to have more say in this company, or do you want to have more of a guarantee that you'll get back your money, right? And you'll also get the income that is promised to you, right? So really, it's a matter of preference. Now, Sansia mentioned the fact that, you know, both are useful in the context of a portfolio. I know that for many Jamaicans, given the you know, the strong wave of IPOs we've had in the past, or waves of IPOs and secondary offerings and so on, a lot of persons are loaded up on stocks, right? I'm sure many persons here might be guilty of only having stocks in their portfolio, right? Now, if you understand anything about good portfolio management, you'd know for sure that it is actually good practice to make sure that you diversify the types of instruments you have in your portfolio, right? And what do I mean? So equity is an ownership right, and you get dividend income and so on, and you can get capital gains if the price goes up and all of that, right? But there's no guarantee that that will happen. One way you can diversify your portfolio is investing in fixed income securities such as bonds that will pay you periodic interest payments guaranteed at a certain frequency, right? And it also offers to you what we call the opportunity to preserve capital, right? So it's good to have that portion of your portfolio, which you know that, okay, you know, I'm preserving this capital. No matter what, I want to make sure that I have this. You know, there may be persons who are saving towards a home for the next 3 years. There may be persons who are saving towards, you know, their children's tuition, or you yourself may be looking at further studies. or some obligation that you have within the next couple of years, that you want to make sure that there's a high chance that you'll be able to meet those commitments. By diversifying your portfolio with fixed income securities such as bond, you have a greater chance of achieving those goals, right? And so that is something that you want to bear in mind. That's a significant benefit that an instrument such as this offer to you, right? When you compare to regular equity investment.
Okay, so it does have both types of investment really do have their role in your portfolio, which is
Right.
so I've been monitoring the chat and I realized a lot of persons have been asking about how it is that they can go about subscribing. How do they participate in this offer? Well, it is important that persons have what we call a JCSD account. If you have an NCB capital markets account, that would help, and we would provide you with what we call the bond purchase agreement, which is an agreement between you and the issuer being NCB Financial Group, that you agree to the terms that they have settled, and Tamara would have shared those terms. You would indicate on that document how much it is that you're going to be participating, and also indicate at what point in time, well, not at what point in time, where your interest statements are to be sent to when it hits March and September of each year through to September 2024. So the document is important. If you don't already have an NCB account, NCB capital markets account, and I'm being quite specific here, because if you do have an NCB account but don't have an NCB capital markets account, you need to open one. You can do so by visiting our website at goipo.jncb.com. And of course, where it says create investment account, you can start this process electronically and walk it through. If at any point in time you're having any issues, of course, be sure to send us an email or give us a call at 876-7106, and we'll be able to respond to any queries or concerns to get you going. Once you have the account in place, now there are some persons who may not necessarily have an account with NCB Capital Markets, but you may have an account with another broker. What we have done is that we have also partnered with these brokers. Some of the brokers that we have onboarded as selling agents include Proven Wealth, VM Wealth Management, Jane Fund Managers Limited, JMB, and there's another person. Is there another broker that I'm forgetting at this time? But I'll be sure to let you know in a few seconds.
Mention Proven.
Yes, I did say Proven, sorry. And the last one being Scotia Investments. My sincerest apologies. So let me go over it again. If you have an investment account with any one of these selling agents, so let me start with Scotia Investments, VM Wealth Management, Proven Wealth, VM, and JMB, along with the Jane Fund Managers, you can also be able to participate in this offer. You just make a call to them or visit any one of their branches, and they will provide you with the necessary agreements that will need to be completed and signed. All right. So let me just make one final check through the chat. I know that we have gone through quite a bit. I think Tamara took us back to some basic finance class there. Alfio, let's see what your question. Thanks for the clarity in relation to bonds and stocks, but is there any comparison to purchasing treasury bills? So it sounds as if Alfio is really into the market. We haven't really heard someone ask about treasury bills in quite some time. So Tamara, in the most simplest form, what is a treasury bill?
Okay. So, I mean, treasury bills, repos, CDs, and so on can be classified or grouped together in one category: short-term liquid instruments, right? In that these investments are generally investments for about a 1-year period or less, right? So that's a key difference between a bond and a treasury bill. In addition to that, treasury bills are issued by the government of the country, right? So the issuer there is a bit different, right? And so when you buy into a treasury bill, pretty much what is there is a guarantee by the government that they'll repay you your money, right? Um, you don't really have the luxury of doing the type of credit analysis that we do generally for a corporate entity such as NCB, right? Because generally what you find that the entity has to rely on the strength of its financials and so on to actually make such a promise to you, right? So that's a key difference. The main difference, as I said, is in terms of tenor and also issuer, right? Yeah.
Okay, great. Thank you so much for your response, Demar. Are there any other questions? As the questions coming in, I guess there are some persons who may have joined us a little late. How can we apply? If you don't have an NCB Capital Markets account, we encourage you to do so. You can do so by visiting goipo.jncb.com, and that is if you already have an NCB account, that you need to open an NCB Capital Markets account. So let us just call it your investment account. You just need to make sure that you have an investment account. You will need, of course, the usual KYC documents, which is a valid ID, your TRN, a proof of address, which should, of course, bear your name, your ID, two references, and proof of source of income. So if you're employed, you're required to provide us with a copy of your payslips. And that is generally what is needed to get your account started. And then we will assist you in, of course, participating in this offer. Just a reminder, minimum is $100,000, annual interest rate of 6%. Interest is paid March and September of each year. It's for only 3 years. It matures September 2024. It is taxed at a rate of 25%, and it is only available in Jamaican dollars. This offer, while we would love for you to come to any one of our NCB bank branches across the island, you can always go to any one of the selling agents we have partnered with. And just to go through that selling agent list again, and let me not forget who they are. It is Scotia Investments, VM Wealth Management, Proven Wealth, and JMB. I did forget somebody. There's also Jane Fund Managers. I'm horrible at this, guys, I confess. So if there are no other questions, queries, we want to thank you so much for joining us this afternoon. We want to wish you and your families continued guidance. We're really in some difficult times here, but of course, we will push through. We are Jamaicans, so we know all about resilience. We want to also indicate to persons, yes, Kelly_365, the bond it's 100,000 minimum in increments of $10,000. We omitted that part. Important for you to know, in increments of $10,000. And yes, Desmond, it is taxed. Interest income in Jamaica, based on the laws of the land, is taxed at a rate of 25%. Let me just take one other question. I'm seeing the questions coming in fast and furious. What kind of bonds are we expecting to invest in? Are these low interest rates? What are the real returns expected? Tamara, can you take that one?
All right, so that's a good question. So I wouldn't call this a low interest rate bond by any means. For the tenure that you're getting, 3 years, you're getting 6% per annum, right? And when we compare that interest rate to what similar bonds offered by the government of Jamaica offer, you're getting a proper 3 percentage points above what similar bonds offered by the government of Jamaica offer. So, I wouldn't consider these low interest bonds at all. And in terms of the real return, that is something I can't project for you what the real returns will be, right? Because that depends on what inflation outturn will be, right? I can't project for you what inflation will be over the next over the next 5 years or over the next 3 years for that matter, right? But what we know is that the BOJ has a target inflation range of, I think, between 4 to 6%, right? So that is something that you want to consider. So if you're even comparing it against that, what that tells you is that you should be able to do at least as well or even better than inflation based on the target range, right?
Great. Thank you so much. So Desmond, at the end, at maturity in 3 years' time, you will be getting back your principal. You will continue to get your interest payment paid to you based on the account that you would have indicated on the onset, every March and September through to maturity. Every March and September, the tax rate of 25% would be applied on the interest. So you get back your principal at maturity. Just want to make sure that we clarify that bit. All right. So guys, again, we look forward to your participation. Thank you so much for spending the last 46 minutes with us. If you have any further questions, queries, or if you are interested in participating in this offer, please send us a text bond at 876-383-2076. That's 876-383-2076. So Michael, to participate in the bond offer, if I already have a JMB equity account, do I still need to open an account at NCB Capital Markets? I want to tell you yes, but no, you don't need to. You just head on over to JMB and they will be able to assist you in getting that account, to getting you started in this offer. Let me just give just one more minute to see if anyone else has any questions. How do I purchase the bond if I'm overseas? Very interesting question. We are happy that you've joined us from wherever you are overseas, and we hope that you are keeping safe. Yes, you can participate in this offer. You can send us an email at multi-channel NCB Capital Markets at jncb.com, and we'll be sure to assist you in getting your account started and you invested in this offer as well. So it's multi-channel NCB Capital Markets at jncb.com. You have all been awesome. Thank you so much for joining us. Again, my name is Cynthia Thompson, and if you have any questions or queries, be sure to reach out to us, and we will help you in getting you participated in this offer. An awesome offer. You would have heard all the benefits Tamara would have shared with you. NCB is a dominant force to be reckoned with. The bank is the largest within the Jamaican territory with 39% market share. We have regional presence. It is safe to say that the group is here for the long haul, and we are happy for customers who would have partnered with us throughout the years to allow us to be at the stage that we are. Thank you so much. Have yourselves a wonderful evening. Big up, bless up, and thank you.
Let's build strong bonds. Let the NCB Financial Group Limited bond offer be your building block to start growing wealth. Earn up to 6% per annum on your investment with semi-annual interest payments. Minimum investment 100,000 Jamaican dollars. Offer closes September 9, 2021. Don't let this wealth building opportunity pass you by. To learn more, you may either speak to your wealth advisor, email multi-channel NCB Capital Markets at jncb.com or text BOND to 876-383-2076. Conditions apply.